Welcome everybody. I do hope you guys have been awesome. You're listening to your boy Leon Sepamashalani. Been a while. First episode of the year. And before I get into anything, I believe that it's only sensible for me to start from the beginning of the year, because in Feb I was offline and just dealing with some family affairs that had to be fixed, but now I'm back, and hence I'm saying, guys, that I think it will only make sense if I start the analysis from the beginning of the year, so that we understand exactly where we are and what to expect in the near future. So we are looking at Nasdaq, right? And looking at this, I did remember that I actually posted this in the Telegram group, and fortunately enough, I did also post this on my TradingView account, right? So guys, as you can see, the account is fairly small. It would be really awesome if you guys can hit your boy up and give your boy a follow on TradingView, if you are on TradingView, of course. But if you're not on TradingView, I'm gonna send you a link so that you can sign up and keep updated as to what I'm looking at and all of that, right? So this is the analysis that I sent on the 9th. It's on the 9th of January. So I sent this to you guys as a rough idea of what to expect the year to look like. Now I'm gonna further explain what's happening here, right? And this is actually related to I don't quite remember which episode it is, but it is the episode where I was talking about candlestick interpretation and how you can utilize that into trading, right? So this is basically that as well, and I'm gonna further explain what I'm looking at when I even was like, I might even pick out this low as the possible yearly low, and I want to retract that statement and focus more on the first quarter of this year, right, of which is January, February and March, right? And this low right here is the first quarter's possible low, right? And as time goes, we will try to see if we can interpret this into the yearly low, because it's still early for me to be making assumptions as to whether this is the yearly low or what, but it is definitely the first quarter's low, right? And pardon, I'm gonna further explain what to expect, and because I got a question from you guys that why didn't I actually look at this area, this fair value gap, as a possible sell entry position, and how did I know that as a level of resistance? Now remember, in the episode I'm referring to at the current moment, the one I was talking about with candlestick interpretation, I actually made it very vague. I was not into details as much as I wanted to, but that form of trading allows you, when you have spotted, for an instance, let's start here, we started that with the shift in structure, right, the break in market structure. Once you have identified your daily break in market structure, for an example, you have identified your daily break in market structure. Once price moves beyond that break, price breaks, retests, right? For an instance right here, price broke, retested. Now once this happens, price will never ever again trade beyond that point, unless some major news events do happen. But it's quite rare that you'll find that after the daily break or weekly break or monthly or yearly break, it's very rare that you'll find price trading back into that area, unless the candlestick that is being formed is some sort of doji candlestick type of situation, of which we do not yet have the confirmation as to whether are we trading within a doji or is it a normal candlestick type of situation. But that all of that it doesn't matter at the current moment. Okay, don't focus on that. What I need you guys to focus on is what I was telling you on that particular episode, that price opens, right? After the price opens, expect price manipulation, right? It can either be an accumulation or a distribution, but it simply depends on the trend of the market, right? So there is this saying in trading that follow the trend, or the trend is your friend. You know, it is 180 billion% true. it is 100% true. When trading, you have to spot a trend, otherwise you're gonna find yourself in a situation whereby the market goes up, you want to buy, goes down, you want to sell, and that is not very lucrative. It is not a proper way of trading, right? So ever since we've highlighted this low, prices never went below that low ever since, right? And we can prove that by coming here, right? This is the open, and price never showed any sign of breaking until right here, where price shifted structure right there. Let me mark it out. In fact, let me mark this out real fast. All right, so we had this shift in market structure, pull back, price started trading, right? The entire month up until Feb, right? And now we have the month January's high was highlighted, and now you need to always expect current price to trade above or below the previous low or high. Okay, but in this instance, price is moving to the upside, so we are expecting that price should be able to manipulate the highs, right, of which it did. And unfortunately, during February, I was not trading at all. I did not take any sort of trades, right? So question may be, to SMC traders, question that now can be, how do we know the price was going to reverse from here? Now we had factors. For an instance, there's this fair value gap right here. Let me just find something more visible. Okay, here we are, right? Here's a fair value gap right here. And someone else can argue and say an order block was right there and whatever, but for the sake of this lesson, I use fair value gaps. I understand fair value gaps better than I do with order blocks. Okay, so I'm gonna pick this fair value gap. So remember what I said, simply because you've now identified your fair value gap does not mean you just jump into the trade, right? Within that fair value gap, and I believe I have not yet explained exactly what fair value gaps are, and the way I'm going to interpret them to you, I'm going to interpret them in a way that also relates to market structure. Because remember what I said last year, that if you can't interpret something or put it in words, rather ignore it completely, because at the end of the day, if you can't understand why something happens, when you're in trouble, you won't find a solution out of it, right? So the fair value gap, price was within that fair value gap. Now we are on a different time frame, and we're in a 30-minute time frame, right? And price was creating lower lows and lower highs, right? And one would have assumed that price broke structure right here, but as you can clearly see, this candlestick is a rejection candlestick, so we cannot say that price here broke structure there. Why? Price rejected, mitigated on this fair value gap, even if it was not full, and then moved to the downside, grabbing more liquidity, then started to make its way up to the actual break in market structure, right? If you did not hear that, please pause, rewind, go through it again. It's very important that you understand these. So for me to be confident in a break or a shift in market structure, I don't like to see like a rejection type of situation, it has to be like a full body break. And that's what to me, classifies a break in a proper, like a legit high probability break in market structure. For someone else, it can be something different, because at the end of the day, we interpret the market differently. We all have different points of views when it comes to interpreting price, right? So since then, price broke, we could have had our entry right here, right? Price structure, creating also a displacement to the upside that created this beautiful fair value gap right here, of which trading we could have utilized this as an entry point, or simply utilize the previous break in market structure, right? So either you had two possible entry points, right? We could have had this fair value gap as an entry point, or a test back to the previously broken structure, of which technically gave a perfect sniper entry type of situation with your stop loss below this low, and then price would have moved until current date, right? So today is, I believe, is the 12th of February 2024, of which is, in actual reality, today is Monday. So price has created a new weekly candlestick, and at the current moment I don't have enough information to make a prediction as to what's gonna happen throughout the day, but definitely tomorrow there's gonna be an answer as to is the market moving up or down for the entire week or not. Hence, I always tell you guys that Monday I normally like to watch price play out, so that I can have better information as to what's gonna happen for the next 3 or 4 days or so. You know what I mean? So I don't like it when I don't have enough information to be making assumptions as to is price moving up or down, because where price is currently, I don't have any sort of information. It's still early to make any sort of conclusion as to whether is this an accumulation or a distribution, right? But as the day goes, I'm gonna keep sending updates in the Telegram group, just to make sure that everybody's up to speed. And the moment I see something moving, the moment I see a proper break, because what I'm waiting to see here is literally what happened right here. So I want to see something similar to this, right? A break and a retest, of which is something similar to what happened at the beginning of the year, right? This thing happens over and over and over and over again, whether it be on the monthly candlestick, whether it be on the weekly, whether it be on the daily. At the end of the day, you need to understand that after price opens, it's gonna trade, starts to manipulate traders, stop traders out of their trades, then make the actual move. So how do we identify the actual move? We identify the actual move when we see a break in the opposite direction. Let me repeat that. Price will start to move when price opens 90%, 95% of the time, in fact, according to my research, according to the time I've spent on the charts, 95% of the time it happens that when price opens, it's gonna go in the wrong direction first. So it creates that false hope of, for instance, let's look at what happened at the beginning of the year. Price opened, started trading to the downside, and people got excited by this, right? And then they started entering trades and whatnot, and then boom, it traded into a key level of support, right? A key level of support, traded into that, rejected, broke structure. Now price starting to trade in the real direction. So every single day before the market opens, every single month before the price, after the price opens, every single year after the price opens, it's going to trade in the opposite direction, then make the actual move after. So hence I'm saying that you need to identify your breaks in market structure, but in the opposite direction. Because what normally happens is that the algorithm is going to create a false move first, trap traders in those false moves, and then breaks market structure in the opposite direction, then move. Hence what we see here. We can also interpret that into exactly what happened here. All right. So with this, right, remember when I was teaching market structure, I said that they have to be consecutive, they have to be a series. In other words, if it's moving to the upside, it has to be a series of higher highs and higher lows until a market structure breaks. And how does market structure properly break? In this instance, let me show you something. For this entire move here, for me to classify it as a proper break in market structure, higher low, higher high, higher low, higher high, and then from the higher high breaks the previous higher low. This would have classified a proper break in market structure. Then the move would have happened. Reason why this price shifted from here, let me make you understand what happened. It was not a consecutive series that led to, a break of the previous higher low, but instead it created something contrary, and I call this an improper market structure. Price will be trading and all of that, series higher high, higher low, but all of a sudden it doesn't create the next higher high. Instead it creates and then lower low. I normally call this an invalidation or improper market structure, right? Before price broke structure here, before it broke structure, it did not create a higher high. Like here, see here, price created a higher high, higher low, higher high, and then from the higher high went straight to break the previous higher low, which did not happen here. So it created a lower high instead of a higher high. It would have been a proper break of like this, but since ever it's like this, it is not classified as a proper break in market structure. It is in fact an improper market structure, and what normally happens is price will simply just break, and this is what I call a fake break, and then will continue to move to the upside to create that validation of structure, or a correction of the market structure, as I call it. You see, this illustration is exactly what happened with price right here. Let me show you. Higher high, higher low. It did not create the next higher high. Instead, it traded below the previous higher high, acted like it's breaking, and went below that, mitigated on that fair value gap that we identified. And the moment this happens, I would have known that price is still going to move to the upside. The moment it trades into this and breaks this, it would have been a conclusion for me to be like, I have enough information to conclude that price is going to move to the upside. Right, so I'm gonna keep you guys updated in terms of what's gonna happen for this current week, and we're gonna move forward. So if you liked the video, please like it, comment, let me know what you think, share the content basically. So if you are not subscribed to the YouTube channel, please give support, subscribe to the channel, click the notification bell so that you get notified every single time I make an upload. Till we meet again tomorrow, same time. Peace out. Oh, one last thing. There's load shedding. This is a message for the people in my Telegram group. By the way, the Telegram group is absolutely free. If you want to join, just hit me up on Instagram. I'm gonna leave my details there. DM me your Telegram number, and then I'll add you in the group. So there's load shedding, and it has been messed up